I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States. Your dollar will be worth just as much tomorrow as it is today.
We know emphatically that is a bullshit statement. And the whole reason they took the dollar off the gold standard was just that, so that they could print money to oblivion. And guess what? Gold went from $30, $40 an ounce to over $1,800 at current day.
I talk about the three types of fakes there are in this world. Number one is fake money. Number two is fake teachers. And number three are fake assets. It all starts with fake money. So in 1971, the US dollar became fake. So why Nixon in 1971 saying the dollar's coming off the gold standard was supposed to be temporary is so important is the US dollar became fake money. It's exactly what my rich dad was saying to me. I was a Marine pilot and I was looking for real money, gold. Because when Nixon took the dollar off the gold standard in 71, he made it illegal. He also made it illegal for Americans to own gold. Imagine that. So I fly behind enemy lines, I meet this little woman, real Vietnamese woman, and I try to get a discount on gold. So gold back in 71 was 35 an ounce. It was now about $50 an ounce in 72. So it was going up. Trouble is, I didn't know what gold was. Most Americans don't know what gold is because they've never seen it, because they made it illegal for Americans to own gold. And we now have everything fake. That's tragic. So it's fake money. The only reason fake money can persist because you have to have fake teachers.
Good mid-afternoon, 2:06 p.m. Eastern Standard Time. I'm XRP Future Millionaire, and we have to get to to the charts right now because, like I said earlier, that was not enough volume to push us up. If you guys want to finish seeing that Robert Kiyosaki clip, I'm going to play it at the end of this video, so there's still a good portion of it left. I played the first 2 minutes, but I want you guys to see the entirety of that. So after we get done with these charts, we're going to go into it, but I didn't want to play the whole thing and then do the charts because I wanted to keep it spicy. So again, Bitcoin's back under 36,000. We talked about the big problem this morning, and now it came through this 35,574. So now it's telling us we're getting rejected by the 20-day, even on a attempt up. But there's no volume, ladies and gentlemen. When we came up, the volume crashed. So we have engulfing candles at the downside. I think we're going to make our way down. I really do. I think we're going to make our way down. I thought all along we had to at least come down to this 34,900 or whatever on the uptrend. And since we're in this much larger pattern, but you can see we're in a channel, a rising channel. If we break that rising channel, we come all the way down. We're going to come down, way down. And the first stop would be, there's a lot of stops, but I mean, 33, 32 area, and then 28, 30. I mean, there's a lot of areas over here once you break this rising channel. And it's not going to be pretty. And you can also say we're in an ascending triangle, or descending triangle, I should say. In this area, no, it's still an ascending triangle. In this short-term area, it's still an ascending triangle because it hasn't come down far enough to turn it into a descending triangle yet. If it breaks this uptrend where it's at right now, it will. XRP came all the way down to the bottom of this uptrend as we thought. This is the ascending triangle, which is in the same. Which is in the same time frame as the symmetrical triangle support. But we did know there was a chance to hit this ascending bottom. We had one ascend. So this would be the fourth. Now if it breaks this, we come down to this 52 cent area. And then if it breaks that, that's when it gets spicy. Because you got a 48 cent roughly around here. And then you got 42, 38. You know, that it can get real spicy if we break this. So if you're looking to buy XRP, I wouldn't buy it just yet, ladies and gentlemen, because we got rejected upon once again by 62,371. Like I said yesterday, we could come up here and retest 66, and that's why it's spicy, and that's exactly what we did. We've come up there twice and got rejected both times, and now we have a bearish engulfing candle that if the integrity pulls through, if we break 56,557, that's an engulfing to the downside. And then if we break 56,674, we're coming down to the next level, which would be 52 cents, because this looks like a continuation. We have to hold this level, otherwise we're in some serious shit. And then you've got 54,828, which could theoretically be a area double bottom from January of this year. But I'm not convinced that's even going to have a chance of holding. This is getting ugly. And if this is how it's going to close the trading week, we have a thinly traded weekend coming up. It's going to be a disaster. It's going to be an absolute disaster. And then I want to do XDC in this update. We'll do XRP, XDC, Bitcoin, and then I want to get back to Robert Kiyosaki. So XDC in the daily is on top of the 20-day, which is bullish, and it still hasn't completed the divergence. It popped out of the ascending triangle. It's in a much larger symmetrical triangle, but in the shorter time frame from February of this year, it popped out of the ascending triangle. Now it's back testing it. So if it back tests and holds this, and I put this here so everybody would know where it would have to hit for the back test. I put it out a few days ago. And now it's hitting that area for the back test. The 20 days trying to come up. So as long as it holds the 20-day, it'd still come up here and can come up to 648. I don't think it's going to break that with current market conditions. I think we'd be capped at any upside about right here, 6823. So that's what I'm looking at. That's what I'm feeling. I hope you guys appreciate this update. Make sure to hit the like button. Hit that motherfucking like button. We've done tremendous in the last few videos. But I want you guys to finish by listening to this. Also, if you want to join Tom's Army and get a little bit more information, get the exclusive Telegram. We actually had 4 new members of Tom's Army yesterday, an explosion. I was shocked when I seen it. So I'm very happy about that. Join the other 250 people in here as we had to give out some pink slips. We're up to like 262, but you know, it's auto pay on YouTube and people are going around it to not pay it forward, so I had to send out some pink slips, so we're about 12 people lighter. So if you're in here and you're still not caught up, consider yourself lucky. Because there's a few of you in here, but you guys actually contribute in here, so I don't say anything. And yeah, so it's a great community. We have a lot of stuff going on. We have the Lobster Academy if you guys want to get used to it. One day I'll show you my lobster stuff, but I don't want to show it now because I'm focused on the main market. But like I said, I've been doing tremendous in it. And this week alone, I'm up about $4,000, just over $4,000. And I didn't put thousands and thousands. I put about $1,000 down there, and I built it up to, well, about 8,000 now. So it's been a tremendous ride so far. But I want to finish off, let you see Robert Kiyosaki. And also, if you guys would like to get some merch, the merch store is now live. We had our first merch purchase, so that is awesome.
Most teachers in school are people. Most of them really don't understand money. So they really can't teach you about money. So I call them fake teachers, because they tell you to go to school and get a job, save money. Why would you save money? And work hard and get out of debt and all that stuff. But they don't know what they're talking about. That's my poor dad, PhD. Lesson number 1 in Rich Dad, Poor Dad is the rich don't work for money, because in 1971 it became fake. Capitalism is run by a central banking system. The government is, communism is centralized government, capitalism is central.
In this video, I'm going to show you how I've made over $6 million in under 2 years without having to be an affiliate marketer, a coach, a consultant, starting a social media agency, starting an advertising agency, or doing anything else that everyone's pushing you online right now. No, I've actually made over $6 million doing something that I've literally not seen anybody else be able to do. And because of that, I'm able to charge business owners $10, $20, $30, even $50,000 for just a few hours of my time. This one thing that I'm doing right now that business owners are literally begging people for has given me the freedom to travel around the world, learn how to fly a plane, buy the car of my dreams, live in a penthouse in Miami, and pretty much do anything that I want to on a daily basis. Now, I'm not trying to tell you that so I can brag right now. What I'm trying to tell you is that a few years ago, I was going to law school. That was actually the plan. I was doing what everybody told you to do, go to a good school, get a good education, and then work 9 to 5 and have a safe and secure job. But that's when I kind of realized that maybe this wasn't for me, that maybe there was something else out there. And I saw a video that's actually really similar to this one about someone walking through this one little thing that you could do that's not social media marketing, that's not being a coach, a consultant, a salesperson, any of this other stuff, that you could make 10, 20, 30, 50, $100,000 a month online doing this for other business owners, and they would be happy to pay you the money. Now, the most important thing you need to understand here is that nobody else is doing this. This thing that I'm talking about here, this one little skill set that just requires a few hours of your time and has business owners literally showering you with $10,000 to $50,000 checks.
Centralized government, capitalism, and centralized banking. And the more you step back, you look at the big picture.
Oh, you guys had to watch that advertising. I apologize. I had to go check on my son real quick, and I came back. I'm like, oh, of course, an ad. So, hey, I hope you enjoyed that ad.
The ultra-rich control the central banks. For example, the Rothschild Corporation, let's say there's 50 central banks. The Rothschilds own about 48 of them. And so you and I don't have a prayer because money makes the world go round. And the economy runs on money, like it or not. Our financial system, or money, is designed to make the rich richer, but keep the poor middle class poorer. And that's why our schools don't teach us about money, because the school system works for the central banks also. Three kinds of money today that you guys got to be aware of. One is God's money, and God's money is gold and silver. And then there's government money, which is fiat currency, which is the dollar, the yen, the peso, the euro, the yuan. Fake. And everybody's working hard for it. And then there's fake assets. But the reason I brought this here is most people haven't seen it. And so the reason I call it God's money is you can't fake it. You know, you can fake it with a fake ETF. Why did I say it's God's money? Because he was here when the earth was created. And it'll be here when we're all dead and gone. When you're saving those fake dollars, this will still be here. In 1971, President Richard A. Nixon,
Well, I'm not a crook.
Tricky Dick, took the US dollar off the gold standard. Why is that significant?
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar. Your dollar will be worth just as much tomorrow as it is today.
So why Nixon in 1971 saying the dollar's coming off the gold standard was supposed to be temporary is so important, is the US dollar became fake money. For thousands of years, we've done what we're doing today. We spend too much money, we print money, we debase our currency. You know, during the Roman empires, they took gold and silver and they mixed it with lead and nickels. We're doing the same thing. And so the trouble with what's happening to our money is in 1971, when Nixon took us off the gold standard, the dollar became dead, and people don't know that. And they could print as much as they wanted. So the value of the dollar goes down. It's a very rich dad, poor dad. I said savers are losers. Because why would you save it when the Fed can print it? The trouble is, historically, for thousands of years, anybody who's done this collapses. So the Roman Empire collapsed, the Chinese government collapsed, and we're doing the same thing. We just don't live long enough to know it. So we're pretty close right now. We just can't keep printing money and giving people money for free and think that it'll survive. And the trouble is, it's now a global problem. You know, we have the central banks of like European, Japanese, Chinese, everybody's central banks today, and we're printing money. It's not going to last. If you look at what happened with the fake central bank, see, the purpose of the central bank or the Fed or all, you know, the Japanese bank, the Bank of Japan, or the European Central Bank, they pump out fake money. You're going to find that most of my talks is about the Fed. Don't save money. Don't save government money, because they're corrupt as hell, as you know. Save God's money. You know, I don't know what would happen, but I think the house of cards is about to come down.
Guys, that's been my exact message for 14 months to you guys. I don't believe in fiat, and every time I get a paycheck from YouTube or whatever it may be, from classes I teach or just whatever I make a paycheck on, I've put diligently 3/4 of it into probably precious metals for quite some time, at least 50%. But that's recently, or in the past. Now, when you have 3 kids and whatever, I diligently try to do $1,000 a month in gold and silver. To this day, I still do at least $1,000 a month. So, and I've been doing this for a little over 3 years. So the price of gold and silver 3.5 years ago is different than it is now. I bought some silver at like $14, $13 an ounce. I bought some gold, and it was when we collapsed. That's when everything was down, and it was under 15. It was like 14 something. I wasn't even aware that I bought it that cheap. But it's been years, so you start looking at it, and you're like, holy shit, those ounces are $400 or $500 an ounce up. The silver's, up $10, $8 an ounce on some of it. So even with spot prices, you're still clearing, but it's not a get rich quick. It's I'm going to take my money out of the dollar, take that risk away, and I don't even look at it year over year. I look decade over decade. I'm only 38. I started buying it when I was 34, 35. So by the time I'm 48 and 58, the practice that I used when I was started at 35, when I finally figured it out, when I'm 55, I'm going to look at myself at 35 and shake his hand and say, thank you. You turned it around, you figured it out, and now what we did, we made it work.
Anyway, because the corruption inside our banking system is at all-time highs. He who controls the gold makes the rules. And so I decided I'd rather be on the banker side than the employee side. The rich started to get richer because the stock market was going up and the economy was booming because there was all this fake money flooding the system. Then there was this crash here in 1987. So in 1987, after they crashed, they said, oh my God, how do we prevent it from crashing again? So they started creating fake assets. Right in front of our eyes right now, we can see capitalism, socialism, and communism. That's what I'm concerned about. And the average person without financial education from our schools can't see it. They can't see it. So we're shifting to communism right now, central control of the economy. There'll be an IMF bailout, International Monetary Fund. What I say in private, when the IMF steps in to save you, like it did for Greece and Brazil and all that, IMF stands for that's what it means. The monetary system has been blown apart so bad that a foreign government comes in and they're going to start giving us more fake money called SDRs, special drawing rights. I don't know what they are, but they're going to give us more fake money. So what should I do? I always say, gold, silver, God's money.
In fact, one of the reporters specifically asked Powell the question as to whether the Fed would continue to raise interest rates and tighten policy in the event that the economy happened to move into recession. Now, I know the answer to that question, but Powell didn't want to give the answer to that question, so he sidestepped it by basically saying, well, there's no point in even discussing that because there's no evidence of a recession anywhere in sight. In other words, look, it doesn't even matter what we would do if the economy went into recession because it's not going to happen. It's such a remote possibility. There isn't even any evidence of a recession anywhere. You can't see it. And so why even bother to contemplate something that's so unlikely because there's no evidence? Despite the fact that we just had 1 quarter of negative GDP growth. I mean, that is rare. It's very unusual to get 1 quarter of negative GDP growth. In fact, there's a pretty good chance that when you get 1 quarter, you're going to get a 2nd quarter. So to say that there's no sign of a recession anywhere in sight when we could be in one right now, and in fact, if we had a contraction in GDP in the 1st quarter, why wouldn't you think that the contraction in the 2nd quarter might be even greater? Because now what consumers are going to be dealing with that they didn't have to deal with then are much higher mortgage rates, higher interest rates, and prices are higher now than they were then. So all of this is weighing down the consumer. To me, it makes more sense that we're going to have a 2nd quarter of negative GDP growth than it's going to be one and done. I don't think the GDP weakness in Q1 was transitory. I think it's probably here to stay. And I remember when I was going on television in 2008, when I was going on CNBC and Fox News and Bloomberg and CNN and all these other shows, and I was talking about the recession and the coming financial crisis and how bad the economy was, everybody was talking about how the economy was strong. In fact, even the Fed, even Ben Bernanke at that time in 2008 was saying that there was no recession anywhere in sight. The same thing that Powell just said now, except he was saying it in early 2008. And not only wasn't a recession in sight, we were in a recession at the very instant that Bernanke was proclaiming that there was no evidence of a recession. Well, we were in it, and he couldn't even see it. But it wasn't just any recession. It was the Great Recession. It was the worst economic downturn since the Great Depression. We were in it. And the head of the Federal Reserve is saying there's no recession anywhere in sight. I mean, that would be like standing in front of a Category 5 hurricane. Maybe it's already hit. The wind is already blowing. And you're standing there and you're saying, no, there's no rain anywhere in sight. It's clear skies. I mean, it's clear how bad it was. It was clear to me how bad it was in early 2008, but the Fed was oblivious. Well, they're oblivious now. Well, either they were oblivious or they lied. And I think the same thing applies now. How you can say with a straight face that there's no evidence anywhere in sight of a recession when we've not only just had this negative quarter, but look at what's happening in the stock market. I mean, today's rally notwithstanding, we haven't seen this kind of carnage in the stock market. And in fact, in the bond market, we had the worst 4 months in bonds in the history of the bond market.
We looked at the stock market bubble and all of the little pins, more pins than I've ever seen, converging on all of these bubbles, which could burst them simultaneously, leading to an economic disaster. So the stock market, on Dr. Robert Shiller's price earnings ratio that goes back to 1880, one thing that I showed was that there's sometimes a high degree of correlation between the interest rate cycle and the stock market PE cycle. I showed when the stock market is at its maximum, the interest rates could be at their minimum, and the reverse. So you have extremely high reverse correlation here, and then very little correlation here, and then a very high correlation again right here, and then very little correlation in this middle part of the cycle, and now we're at the bottom part of the cycle, and I believe this ultra high correlation in the reverse correlation is once again the major factor that we'll see how this plays out. But I think that interest rates are sort of confirming that the stock market may have seen its peak. If not, it's going higher. But we took a look at some of the things, how much of a bubble the stock market is in. This is the Buffett indicator. It's the Wilshire 5000 full market cap price index, which is all of the publicly traded stocks in the United States divided by GDP. And what we saw is that fair value is usually somewhere between like 50 and 60% of the economy, and we're up at double the size of the economy. How can the companies that create the economy be worth twice as much as the economy? It's just speculation. This bubble, in my opinion, will pop. Then we took a look at how fragile the stock market is, how much leverage is being used. This was margin debt at all of the security brokers and dealers. And then I showed you how every time the PE ratios, the stock market goes into an extreme bubble. And this is PE ratios. Remember, the Buffett indicator is saying that it's in the greatest bubble in history, which I believe is correct. But every time we get into these extreme overvaluations, the reversion doesn't stop until it visits extreme undervaluation, except 2008, where it only visited fair value, and then the Federal Reserve papered over everything with massive currency creation, pushing us back up into a super hyper bubble, bigger than the market in 1929, and second only to 2000. But if you're looking at all of the other indicators, This is actually, I believe that we are in the biggest stock market bubble in history. This is just one of the good measures of whether the stock market is in a bubble or not. So, is it if the bubbles will pop, or when the bubbles will pop? Which one is the proper question here? When will the bubbles pop, or will they ever pop? Well, I believe that they absolutely must burst, that this cannot go forever. So let's take a look. This is the World Gold Council. And if you click on Gold Hub and then Tools and scroll halfway down, you'll see a portfolio.
This is one of my favorite things that he does. So if you guys don't know, this is Mike Maloney. Make sure to go to his YouTube, hit that subscribe button. Also, Peter Schiff, who you've seen before this, and Robert Kiyosaki. Follow them all. They'll change your life. Follow them all. But right now, right here on this particular one, it's cool when he does this, and you're going to get a nice little correlation. Craig, I know you're watching and you're a gold guy. You're going to really enjoy this. So pay attention to this part in particular.
A simulator. And I did that portfolio simulator. Here's $100,000 invested at the beginning of this century until today, rebalanced annually.
So he's basically going to give you the conversion of currency, stocks, gold, cat, all the stuff, bonds, and what you would have in comparison. It's really cool when he does this. So I'm going to let this play out until the end, actually.
And it's defaulted to what I believe is this silly mixture of all of these different asset classes. Now, if you want to do this, go right ahead, but I believe that this takes a professional portfolio manager working full-time on it. If not, you better be working full-time on it. And then you've got one of the old Wall Street sayings, 40% bonds and 60% stocks, and you'll be fine. And you could manage this yourself with ETFs. So I set it here, and then I set one of them with just gold. And the results of those portfolio allocations, where you see the crazy mix of portfolio one and all of these different allocations, the easier mix, which you could do through ETFs.
Which, this is, with everything I've ever learned, when you guys understand, and you could put silver in there too, but he's using gold. This is why I started buying gold and silver so much. Like, I started learning about this because of Mike Maloney years ago. And once I realized what he was actually talking about, it didn't matter if I went through and was finicky and tried to do all this and different things, even in the stock market or whatever I do, decade over decade, just because of the way markets work. Gold, well, you guys will see, I don't even need to talk. I can let it speak for itself right here.
Yourself, if you wanted, 60-40 stocks and bonds, or 100% gold. And when you scroll down, you see the portfolio.
And this was from the year 2000, January of 2000, through March 31st of this year. So a 22-year span.
Portfolio returns and the graph of them, and both Portfolio 1 and Portfolio 2 gave you back about 4 times your initial investment. But whoa, look at Portfolio 3, 100% gold, almost 7 times your initial investment. And so here...
And I don't have to... I own my gold and my silver. I own it. You own that shit. That's yours. It's liquid. If you needed it, you could get rid of it for money. You could get rid of it for other things. This other stuff is on paper, most of it. But, this speaks for itself.
It's a graph of it. Now, which number sounds larger to you, 4 or 7? Which one would you have if this is returns on an investment? Well, to me, I would rather have 7 than 4. Now, realize there is some volatility here. If you start this portfolio manager at one of these peaks here, then gold will look worse than the stock market. If you start it at this minimum on gold, gold will way outshine the stock market. If you started at this peak here, the stock market will outshine gold. But gold, I believe, has the best luster of all, and this is where I have put the majority of my net worth as a bet.
When Mike Maloney says that, that's all I need to hear. Once I heard him say that a few years ago, that the majority of his net worth is in the bullion, I changed the whole way I started saving. Even when I had no money, when I finally started saving, it changed the way I did everything. It's just, this man knows what the fuck he's talking about.
And it's a bet not just on putting things in a safe haven and protecting my assets, but, I've often said that there are these brief moments in history where gold, where the precious metals, not only offer a safe haven from volatility and your portfolio collapsing, but they also offer the maximum gains in absolute purchasing power. These are brief moments in history. They go by very quickly. I believe that we're within the next 5 years, we are going to see the tail end, and 90% of the move comes in the last 10% of the time.